today's talk is rent or buy in an overheated market, but we will touch base on what about right now where it's a relatively slower market and how are the interest rates affecting this rent or buy decision. So we'll talk about the pros and cons, benefits and pitfalls, the costs associated with renting or buying, and so forth. So without further ado, I'm going to introduce to you Jordan Thompson.
Hey, Gary, nice to see you again. Like I said, I'm really enjoying doing these webinars with you. And this is a great topic, right? We've got so many people, especially, here in Vancouver and Canada, we love buying real estate, but it's been a crazy market over the past couple of years. And, people have definitely jumped on the bandwagon, bought lots of real estate, but things are changing now. And, maybe renting is where it's got to be right now for some of our clients and our borrowers. And we do get that question a lot. Is it better to if I just stay renting, what does that mean? And should I try to buy? So let's go over a couple of, say, the pros of renting versus buying. So what the pros of renting? Let's start with that. Well, I think some of the first key points are renting provides you with more flexibility if you just want to up and go. I have clients who like doing that. They want to be able to jump around. Maybe they want to move. Maybe they want to travel. And if that's your lifestyle, maybe buying a home isn't the right answer for you. Obviously, the second huge one is that it doesn't require a down payment.
Yep.
Here in the Lower Mainland, one of the hardest things to do, it's not qualifying for the mortgage, it's getting the down payment. And we see so many down payments coming from family members at gifts because it's just not enough to have $20,000 or $30,000 or $40,000 down. So it's hard to come up with that down payment. It takes many years of savings, or as we're seeing, definitely more of our borrowers are getting gifts, gifted funds from family, and that might not always be possible. So obviously with renting, you don't have that issue.
Less hassle, of course, when you're renting. You don't really own the home, so you don't have to be in charge of maintenance.
A lot of renters don't even realize that there is a strata fee associated with their condo. Let's use condos, for example. And sometimes those condos can be, condo fees are really hefty. I've got some clients who are paying upwards of $1,200 per month for their strata fee because it's a full access building. It has a gym and a pool and a concierge and parking. And they're not having to pay that as a renter. And that's a lot of money every month to have to consider. Let's take into account there are property taxes as well every year that you have to take into account if you own. But as a renter, hey, you don't have to deal with that. You just have to pay your rent on time every month. And we don't have very large increases in the rental. If you rent, and let's say for that same apartment or that equivalent condo, for example, and the mortgage would be higher, like you mentioned earlier, if you could take that savings, let's say you have a fairly low rental payment, take that savings, invest that money, save that money, do something with that money, right? Because then if we take a look at the pros of buying, that's one of the things that buying gives you. It's a forced savings plan. So as a renter, you're basically paying somebody else's mortgage or you're putting money into their pocket.
That's right.
So as a renter, if you can, and if your budget permits, take that savings that you might have by not paying the strata fee and the property taxes and so forth, and do something useful with that as well.
Also, you're able to rent something really nice for a fraction of the cost of actually owning the property.
Yes.
For example, like a $3 million condo downtown, and the mortgage payment might be like $10,000-15,000, whereas renting it might only cost you $4,000 or $5,000. So
Yes,
yeah,
absolutely.
yeah.
Yeah,
Like the
for
mortgage
sure.
might have been 10,000-15,000 plus strata fee plus all that stuff. It
Right.
might be upwards of $20,000. But renting it, you might pay just $4,000 or $5,000 or maybe $6,000.
Yeah, that's a huge one.
Yeah.
You're right. And obviously I think we all know what the cons of renting are.
Mhm.
You can get booted out with a couple months notice.
That's right.
All right. I have got clients right now. They just bought a rental property at the end of February. They have tenants in the home and they are now selling. So what is that? 6 months time.
Mhm.
And if you just settled in, maybe you've got kids, you've moved them to a new school, your work is nearby, whatever, you're gone.
Yeah.
So obviously that, I mean, that's a huge con against renting. And in this market, as we were talking about, rents are being pushed higher because more people are needing to rent at this
Because they can't
time.
qualify.
Right. So,
Mhm.
which is kind of another topic that we will definitely touch on because it's all interconnected. What's going on in the mortgage market with interest rates.
Mhm.
So yes, rents are definitely going up, and it's harder to find a place.
Yeah, it is, because when rental demand goes up, the rental
Right.
vacancy goes down. So then
Exactly.
landlords are like, well, it's a landlord market. And then all of a sudden
The landlord, yeah, yeah,
they jack up the rents.
exactly.
So you have certainty when you rent in the sense that you know your monthly payments, but you don't have certainty in the sense that the landlord could kick you out like with a few months notice.
Mhm.
Yeah.
I'm going to throw one more in here that I hadn't even thought about, but there are so many for and against.
Mhm.
Some people are just really afraid of owning a home and what comes with that and having a mortgage. It literally causes them angst.
Yeah, they feel
You know,
tied down or something like that.
they're afraid, literally afraid. And as much as I don't think they should be afraid, if it's going to cause you extreme anxiety, maybe renting is the right way to go.
Yeah.
Yes. Not
I
many, but I've
I
definitely
have
run into those types of people.
my wife was just telling me 2 days ago, yesterday, that her friend thought that when she's renting, her friend was saying, oh, if I have a mortgage and I have a 25-year amortization, does that mean I can't move for 25 years?
Oh,
Like, my wife was like, no, you can move. But
yeah,
somehow she believed that you get a mortgage and all of a sudden you're tied down to that location for life. I was
right.
like, wow, where did you get that from? But yeah, there are some people who are just afraid of home ownership and they
They
have
really,
misconceptions of what it means to get a mortgage. And
right. And they talk themselves out of it,
yeah,
right? They self-sabotage. So I think that perhaps those people, maybe renting is better for them.
yeah, yeah. And maybe they never knew, like they may have grown up in an environment where they always rented. It's just like people who buy cars versus rent, like leasing cars. Some people
Mm,
grow up always leasing cars, switching every couple of years. But some people are like, no, no, I bought a car, I drove it for like 20 years,
yeah,
that kind of thing, right? So really depends, right?
yeah. And it's definitely a personal decision based on all of these things. But let's go over to the buying, and
Yeah.
you know, let's start with the costs. I know not the cost of buying. Let's start with the pros of buying. We want to know what the costs are. Um, I think the biggest one is, or one of the biggest ones for sure, is you buy a home, you can put down roots in that home. You can, it's not for everybody, but build a family in that home. You can stay there. It's yours to make your own. And that's huge. That pride of ownership is huge
Yeah.
when you are in your own home. And then, of course, you do have the forced savings that comes with home ownership, the building of equity as you're paying down your mortgage, rather than that rent payment going to somebody else. Your your mortgage payment is going back into your pocket, right? You're paying down the principal of your mortgage. Hopefully, it's creating equity. Real estate is a great long-term hold to build wealth.
It almost always, it's like almost always goes up in the long run.
Almost always goes up. Exactly. We might have, our ebb and flow and our dips and so forth. But if you are keeping it as a longer term hold, you should see that equity increase. There is, I think, we were talking about the down payment with renting and how it's hard to come up with the down payment. Well, that's the number one way to come up with the down payment for another home, is the equity built into your first home. That is the way to continue that tract of.
And don't forget, like, the bank is lending you typically 80% of the property price. So you're only putting down 20% of the property price, or in some cases less than 20%.
Yeah.
And you get to take advantage of 100% of the asset appreciation when the property. So let's say it's $1 million home or $500,000 home, you put down 20% down, which is 100,000. But when the property goes up from 500,000 to 600,000, the bank doesn't take any of that, any of the asset appreciation, but they lend you $400,000, which is 80% of the property price. So it's a very wise financial decision for most people.
Yeah. And, just before these rate hikes that we've been experiencing over the past several months, mortgage payments were less than rent payments, right? So if you could get your foot in the door, you'd find that, wow, my mortgage payment is actually less than what I was paying in rent to somebody else, right? But like we talked about, there are those, home ownership does come with costs. You are responsible for the maintenance of the home, the property taxes, strata fees, any potential levies, right, that might come with strata ownership, or if you buy a house, a new roof, hot water tank, there are definitely costs. So homeowners really do need to budget for that, and realize that it's not free. And of course, you have your mortgage, and again, that kind of ties into what I want to talk about a little bit further, and what's going on with the rates and how that is affecting homeowners right now, because it is definitely a unique time for us. And how is that affecting homeowners, for sure.
So the cons of buying, well, you could be over leveraged in some cases. You could be over leveraged, but that may be the case in renting as well. But generally, renting, you're usually on a 1-year fixed term, not on a 25-year mortgage kind of. Right?
Yeah, it's a great way of putting it.
If you lost your job in when you're renting, chances are, you might just have to walk out of a 1-year fixed term. But if you lost your job in a 25-year amortization, a mortgage, it's a little bit different, right? So
yeah. And I think, like, right now, if you bought at the height of the market, the peak, just now, February of this year, speaking of being over leveraged, you may have paid too much, right? And so your home value is down, so you actually lost money. But we did mention, right, the ups and downs of real estate, and if you can just kind of hang on, you should see yourself come out of that hole. But hopefully, we don't know anybody in that position.
Yeah, the good thing is, you bought. Let's say you bought at the height of the market in January, February. You bought high, but the interest rates were still 2% at that time, right? Versus
Very,
now, the prices have gone down, but you're paying 5% in mortgage, right? So it's quite a different story, right? So it's not like there's a perfect time to buy or sell. It's really when you're ready. Obviously, you want to talk to your professionals, realtor and mortgage broker, that kind of thing.
Yeah, and something to do with mortgages and home ownership and what's going on now. We've got all these interest rate hikes. We have people renewing their mortgages, and due to very low rates, they're having what's called sticker shock. So, they might have been paying a rate that was half what they're having to pay now. So their payments have had to increase dramatically. Definitely seeing that a lot right now. So I think that, with home ownership also comes financial responsibility as well. So you need to be paying attention to that, because your mortgage can change, rates can change. And so for some people, that's a pretty scary thing. I could tell you right now, I've got a lot of scared homeowners, not quite sure what they're going to do. So it is definitely a big, it is a big jump, but I think that home ownership is certainly worth it. Compare my days of renting versus home ownership, and I'll take the home ownership any day of the week.
Yeah. So Jordan, like, why don't you share the story that you heard, that you read an article in the study of people buying versus renting?
Oh yeah, I did a video about a year ago, and I'm sorry I don't recollect all the information, but
You can just summarize it.
yeah, it was a study that basically said, they took a look at renters and buyers over a long period of time, and they found that homeowners, home buyers financially ended up ahead in terms of their personal wealth and how much they had saved and their overall costs during that study. So they found that home ownership actually financially got you ahead, not just in the fact that you had a tangible asset at the end of it, but actually more cash flow and more savings at the end of their study, which was interesting because you would think it would be renters that it saved money during that kind of term, but they found that it was actually homeowners that came out at the end of it.
And then probably like when you look at that study, obviously we don't know the specific details and what sample size they use for the study, but
Right.
a majority of people out there, the ones who are more upper class and wealthier, typically they own, and then the lower class, a majority of them, typically they rent. So obviously there are exceptions where there are very wealthy people who rent. And then there are also people who are in the lower class that do own, right? So, but then majority of the cases, typically from you just looking at my client database, majority of the wealthy people that I know, they own. And majority of the people who are in the lower class, they rent, right? It's just that it's hard for them to save, a couple $100,000 for a down payment, right?
Well, I think that's the biggest thing.
Yeah.
And they don't have any family to draw a gift from.
Yeah.
So we're seeing a lot of generational transfer of wealth, right? And it kind of continues down the line. So I do agree with you there for sure.
So like, when I look at this, the rent or buy in an overheated market, when the market's hot, you see prices going up like crazy, and then people, there's fear of missing out and people jump in and try to buy, right? But then maybe the perception is more people buy when the market's going up. But and then people might think, oh, it's a good time to rent because there's more demand for buying. Some people think that. Oh, and then
Right.
in a slow market, less people buy and therefore more people rent. But I always give I give the question to my clients. I say, hey, overall, do you think in a hot market, do people rent or buy? And then they always go, oh, in a hot market, they buy, right? And then I go, okay, in a slow market, do more people buy or rent? And they're like, oh, in a slow market, they buy or they rent or whatever. I say it's a trick question because when I say, do more people buy or rent in a slow market versus a hot market? The answer is they rent. More people rent, no matter what happens. Because are there more wealthy people up there, or are there more middle class people and poor people? The answer is they're more middle class and poor people. Like, why do you think Visa and MasterCard and those credit card companies make money? Not only do they have, like, partnerships with restaurants and businesses, but a lot of people out there, do they live paycheck to paycheck, and they don't, they don't pay their credit cards on time, and they pay interest and all that. And so I was trying to explain to my clients that regardless of what happens, people will always rent. There will always be a demand for renting. It's just like I asked them, okay, are there more people buying Mercedes or more people buying Honda Civics? And then they're like, oh, Mercedes in Vancouver because it's really wealthy or whatever. I said the answer is Honda Civics.
Yes.
There's more demand, right? And then, like, I'm explaining to them, to share with them, that when you buy a property to rent, there will always be demand, especially if your rental property is targeted toward the middle and lower class, because they are the ones who typically rent, right? Because they can't, they're living paycheck to paycheck, and they are not able to save the down payment to be able to buy a property, right? So I'm sharing these questions to explain that, there's always rental demand. There just is. And so, yeah, that kind of answers or summarizes the rent or buy in a hot market versus a slow market.
Well, and I quickly want to touch on, what's going on right now. We've got the increase in the mortgage rates. And so we're seeing, we had a webinar on this. And at that time, we asked, okay, are we going to see this dampen the market? And we said yes, and it's absolutely the case. We're having people not be able to afford the cost of their mortgage payments now. So they're saying, I'm out, I just can't afford that. And we're also seeing mortgage qualifications go down by 10 to 15%. So as people can afford less or qualify for less, they can't offer as much. It's definitely a less heated market, but there's opportunity in that as well. If you are okay, and you can deal with the rates as they are, because the rates are not going to be staying like this forever, right? We're dealing with inflation here. We're trying to dampen and curb this inflation before it gets entrenched and so forth. If you can deal with that, there are some deals to be had, I think. Don't always follow the herd, right? Everybody bought. Okay, people are not buying now. Guess what? Now's the time to buy. There are some deals to be had. So I think that even as the market is, cooling down, we're thinking, okay, these mortgage rates are killing demand. There's definitely, there should be some deals out there, seeing the prices come down, less bidding wars, everything. So if you are wanting to buy, my answer is definitely keep that door open. Sitting on the sidelines can kill you if you want to get into the market.
That's right.
Too often. And I use the analogy of changing goalposts. They're constantly changing in the mortgage world. And so, if you think, well, I'm going to sit on the sidelines, I've got my down payment, but I'm going to wait to see what the market does. I'm going to wait to see about the mortgage rates and wait to see about the housing prices. Often you're priced out of the mortgage, or mortgage rules change, and now you no longer qualify for that mortgage.
Yeah.
So just a piece of advice: don't wait too long if you want to get in. Right.
Yeah,
and
you
if
want to
you
get
can,
into the market sooner rather than later. Some people are concerned about whether it's gonna, like, the economy is going to a recession, all that stuff. When you look at the global economic scale, like the global economy, what's going on? Yeah, there's like the war in Ukraine and Russia, and there's like increase in interest rates and uncertainty. And so we are in a cycle where where the banks have given out too much money,
Yeah,
which has caused hyperinflation, which the banks don't like. So the banks now need to work like mitigate that. So they need to
yeah,
increase rates in order to slow down inflation. And so
yeah,
that's what they're doing now. But is this going to be forever? No, there will be a time where they've increased the rates to the top. There now that it's already slowed and potentially a small recession, like maybe for a couple months or maybe, then they're like, okay, let's drop the rates again. So if you look historically, when the bank has done this, those periods of time only last like a year or 2 years, or
yeah.
they don't last for like decades.
Right, right. Yeah,
Mhm.
and that's what we are expecting now. That's what economists are saying. We've certainly gotten it wrong in the past, but we don't expect rates to persist once they do reach their peak. We don't expect it to persist for years and years to come, right? So,
Right.
yeah,
So
that's
this
it.
this decrease in the market is only temporary. So that's why you might want to take it
Oh, and
when the
yeah.
market
Mhm.
is slow, because there will be a time where it starts creeping up again.
Yeah, I think so. Don't know when, but
Yeah, just because
I agree.
Vancouver is such a
It will
beautiful,
again.
yeah, because the population increase in this city just keeps going up because of the just jobs, and because so the population growth increases because of the job market. So
Mhm.
because the job market is pretty strong here, increase in GDP, increase in jobs, increase in population, increase in people flocking to Vancouver. And so when people flock to Vancouver, it increases rental demand. And then because when rental demand increases, there's a decrease in rental vacancy. And when
Mhm.
there's a decrease in rental vacancy, rents go up. And so when rents go up, people are like, oh, well, the rents are so expensive, I might as well buy. And so there's purchasing demand,
Yeah,
and purchase demand goes up. And when purchase demand goes up, supply goes down. And then
yeah,
when supply of houses or condos go down, then prices go up. That's how it
yeah.
works. So yeah, sure, there's some blips here and there with interest rates, inflation, all that stuff. But if the bottom, the first step, the GDP and the job market, if those are strong, the forecast is up in the long run.
Yeah,
Yeah.
yeah. So I think kind of to wrap everything up, whether or not to buy or rent in an overheated market or where we are, it definitely comes down to personal choice. It comes down to your ability to do so. There are lots of ways that we can help our clients strategize
Yeah.
to be able to get into the market. That's the thing, it's not just an overnight decision. Oh, I'm going to go buy a house tomorrow, right? It takes some planning, it takes understanding. Um, and so we can certainly help you with that. I mean, we work with clients for several years, sometimes before they actually
Yeah.
can make it into the market. But yeah, it comes down to personal preference, but it's good to know, the costs associated with buying a home. And I think, long term, it's a great place to be, but it's not for everybody. So always, I think talking to your realtor, mortgage professional, financial planner, um, is a great place to start.
Can I ask a question instead of just typing it out?
Yeah, Daniel,
Yeah,
ask a
sure.
question.
Okay, so I have a rental property around the Broadway commercial corridor and thinking of selling, but obviously with the interest rates going up, I might not get what I'm want. So question is, if I sell, one of the concerns is the capital gains. And then if I don't sell, I mean, I continue renting. And I know in the Broadway corridor area, there's a lot of development. If I held on, with all this development going on, I'm pretty sure that the house prices are going to go up.
Yep.
So the question is, do I sell or do I buy?
It depends when what you're planning to do with that money and why you want to sell.
Yeah, what's your mortgage look like?
It's low. I owe about just over 300,000.
Okay, are you in a fixed or a variable?
It is fixed right now.
Okay, so do you know what rate you're paying? Are you okay to say that?
Between 4 and 5, I think.
Okay. Ah, you know,
Probably
I,
with a fixed mortgage, you're gonna get, gouged for breaking that mortgage,
Hmm.
right? I don't know how
yes.
much, but
Eh, Yeah, it depends on when you actually got the mortgage and what the
yeah,
posted rates were at that time, or if you're with a non-bank lender, you'll get off a little bit easier. I, if you're breaking even, personally, I think that government rules are really trying to make it harder to be an investor. Um, and some things are coming down the pipeline where it's going to be harder to get in. One of the ideas I'm hearing kind of floating around is, larger down payments. I think if it's not doing you any harm, I personally would keep it.
yeah.
That's
You
just
usually,
me.
yeah. When I talk to my clients, like I'm really thinking, why do you want to sell? And unless
Mhm.
they can give me a very good reason, I usually tell them to keep it. Like I
Mhm.
tell them the story of the golden goose, and like a farmer has a goose and the goose started laying golden eggs, and then the farmer tried to kill the golden goose because he thought there's like a whole storehouse of eggs in his stomach, and then he basically killed his cash cow, right? So I try to help my clients build a portfolio of golden geese so that they live off the rent. So
Right.
like, yeah, there are times when you need to sell because you want to upsize, or you need it for like a personal situation or financial situation. But for most of the time, I just ask them to keep it unless they're like, oh, I actually need to upsize. I need to sell this because it's a headache for me and I can't
Yeah.
handle it. And so depends on why you want to sell. That's the
Yeah. That's it. Yeah.
I can sort of tell you about the why we want to sell. We've owned the property for about 7 years now. It was my wife's where she used to live when she was young.
Hmm.
So it was passed on to us by
Hmm.
her mother. And it's done well since then.
Mhm.
We've been renting out, and then I guess last October we had a bad tenant. We had to
Ah,
go through court
Wow.
to kick them out, and we're still fighting with them to get
Ouch.
rental payment. So
oh,
the continuing of wanting to rent is now collecting payment is being a bit of a hindrance for us. So
Yeah.
that's one of the reasons. And plus we're, with COVID hopefully over soon, we want to travel. We want to use some of that money to travel. But we've got a huge equity on that property. So I'm thinking, well, why can't we just borrow against the equity and
Could
travel?
HELOC.
Yeah.
I was going to say, you may be able to take some equity out of that home, but to use for travel for sure.
Yeah. Yeah.
That's
And
a
that
tough.
way you get to keep the asset and you still get you take advantage of the asset appreciation. When Broadway corridor, like, with all the development there, like in the next couple of years, that property on the Broadway corridor is going to skyrocket in what it's worth. So unless you can't get a significant HELOC, or you really you don't want to deal with it anymore, like I don't know your specific situation and how emotionally taxing it is, but just from our like 5-minute conversation with you, it sounds like might be worth it to keep it. But hey, if it's really bothering you guys, and yeah, you can sell it, sure. Will you leave some money on the table? Yeah, of course, but like it really depends on what you're comfortable with, right? You want to be educated, and then you want to be able to make an informed decision based on the risks, pros and cons, right?
That's why I'm here, to get educated.
Yeah, yeah.
Daniel, do you have a principal residence as
I do.
well?
I do.
the only thing I would say is, maybe you sell and you take that money and you either upsize or, I guess you could invest it as well, but
Yeah.
just as long as you've got something.
Yeah.
Right. Like if it was your only property, I would say, no, please keep it. Right.
Yeah, no, for sure. We've been trying to get our kids to move into the rental property as well, but they can't afford to pay the rent because there's just they're university students. So
Oh, yeah, yeah. I do know of a case where, would you be okay if they paid less rent than what your current tenants are paying?
I guess it depends. We'd like the tenants to pay for the for the mortgage and
The
upkeep,
mortgage,
every and all that stuff, right? Part of the
yeah,
part of
yeah,
building insurance. As long as we're breaking even or just a little bit of cash positive, I'm happy with that.
yeah.
Yeah. It's unfortunate that you just bumped into a bad tenant.
Mhm.
It happens to the best of us, even if we do a really good criminal record check and all that stuff. Sometimes it's just the luck of the draw. There's a lot of different plays you could make. You can Airbnb the place, you can work out some agreement with your kids. There's a lot of things you can do. And so, definitely I would reach out to me or Jordan like after this, and we can run some scenarios, possibilities, what you could do with the money, how much money do you need, whether you can get a line of credit, how much of a line of credit could you get? Is it a small amount or is it a large amount? And then based on that, then you can make a more informed decision.
Okay, that sounds good. I like your golden goose.
Yeah,
story,
yeah,
'cause
that's one of the my signature stories that I use.
Yes,
this is like our golden goose. We don't want to get rid of this, but
Yeah,
and yet
right.
there's a bit of a thorn on the side.
yeah. Sometimes it is a pain in the butt, but if you can put up with that painful golden goose, it pays dividends in the long run.
I hear you.
And I wish you luck with that, Daniel, with the tenant situation.
Yeah.
Thank you.
So definitely reach out to me or Jordan afterwards, and then we can definitely point you in the direction. One of my team members, she had a horrible tenant situation with her mom's property, and she had to get a lawyer involved and kick them out, and there was lots of kicking and screaming, lots of drama, but got the job done. It's just part of owning real estate, part of owning a rental property. It is the battle scars associated with owning a rental property. It will happen from time to time to people. Thank you for joining this webinar. You will get a copy of the recording within 48 to 72 hours. Feel free to reach out to us, GaryWongRealty.com or JordanThompson.ca. You have our information. And we're glad that you joined this webinar, and we look forward to hearing from you or talking to you. And also we will see you next month.